Executive Vice President at Elara Securities, joining us this morning. Karan, hi, very good morning. This is Harsh here. Give us a sense. You're obviously we're in conversation to try and understand what the impact of this new product by Pernod could be on the India Alcobev space. Give us a sense as to what you're penciling in terms of an impact.
Hi, good morning. So I think from a Pernod perspective, it's after a really long time that they have done any kind of new launch in the market. They have idly tried to focus on renovating existing IP, and that's actually been the plan by many other MNC players like United Spirits as well. It's the first time that after a long time they'll probably launch a new series, which is Exclamation series, and this is not coming in the ultra luxury segment, rather, it's coming in the upper prestige segment. They've launched four products in this: vodka, gin, whiskey, and tequila. So I think this is going to be a good thing by them in terms of product innovation, which comes, and this will increase competitive intensity in the market in the upper prestige segment. It's very early days to call out the exact impact of this on the incumbent companies, but they do expect a gradual launch across various states. Currently, they're looking to launch in the northern markets, which is the likes of UP, Haryana, and they will launch this in Maharashtra, Karnataka also over a period of time. But it's a good news that they're also getting back into innovation and competition going to increase as far as branding is concerned.
Right, Karan, hi, morning. Talk to us about the price segment in which this exclamation launch has been made by Pernod Ricard. What could be the penetration rate in a market that is already so full of a lot of new Alcobev innovations? But give us your sense on how the pricing works out for the company.
So the pricing is in the range of 1,000 to 1,200 rupees. As far as North pricing is concerned, this product is still not launched in the Western markets. So there's no clear clarity in terms of where this will fall. But as of now, the product looks to be in the range of upper prestige to luxury segment. Upper prestige pricing in a market like Maharashtra is 1,500 rupees, and luxury goes beyond 2,000 rupees. So in a market like Maharashtra, that's where the pricing of this product will be. In terms of competitors, I think this product is going to compete with the likes of Royal Ranthambore, some of the entry-level luxury scotch by UNSP, and it will also compete with the Blenders Pride Reserve, other names like Black Dog, Black and White. So upper prestige to luxury segment is where the price points are. In terms of the volume numbers, I think this is the segment which is seeing strong growth. This segment is growing by anywhere in the range of 20-25% as far as volumes is concerned. This segment does make up premium margins as well. And in terms of overall contribution to the overall market, I think 440 million cases is the spirits markets. Out of that, 200-250 million is the whiskey market. And within that, upper prestige luxury could account for anywhere between 15-20% of volumes. So it's a reasonable sized market at a reasonable price point, growing very fast with premium margins.
Karan, your top picks within the space, and how do you look at valuations at this point, and how do you rationalize some of them? Because stocks have obviously run up, and they're trading at slightly elevated valuations, right?
So within Alcobev, we continue to like Radico. We have a reduced rating on United Spirits and United Breweries. We do see concerns of Maharashtra excise hike on UNSP over the next 2 to 3 quarters because of the duty price hike. MML supplies will increase in market like Maharashtra, which could further dampen growth rates for UNSP because McDowell's #1 is a very large component of their overall portfolio. Radico primarily will like because of the innovation. I think Radico is the only company amongst the local companies which has seen brand innovation. They've actually launched many new brands: Royal Ranthambore, Jaisalmer, Rampur, even Morpheus for that matter, which is like a new whiskey which has come in the market today. So they've launched almost about 12 to 13 new IP-led brands as compared to the global companies like Pernod and UNSP, which have not launched more than 2 to 3 new IPs in the market. And for the global companies, these IPs are launched in the luxury segment as of now, which is a very small component of overall volumes. So it's ABD and Radico, which has been the most aggressive in terms of brand innovation, which will lead to continued volume growth rate for Radico, more than 18-20% in the P&A portfolio. And that could lead to better share price performance for them.
Okay. And Karan, give us your take on the India-UK FTA. It's a big positive for the entire Alcobev space because, as we understand, this will halve the steep 150% import duty on a Scotch whiskey and gin to 75% now. Big ups for a market like India that is predominantly big on the darker spirits like your whiskey and gin. But what happens to beer makers, to makers of vodka, like you were just mentioning? What happens to some of these companies, and how does the India-UK FTA play out for the Alcobev space back home?
So Alcobev space, UK FTA has got two impacts. One is, of course, the acceleration in the volume growth. If you look at the luxury segment, as I was pointing out, the luxury segment is sub 10% in terms of volume contribution for a market like India. But in terms of revenue contribution, it's about 15 to 18% of revenues for the India Alcobev market. Now, volume growth today in the luxury segment is already at about 20 odd percent, which could move to 25-30% also in the medium term because of the UK FTA positive impact. UK FTA duty is coming down by half, but the actual MRP impact is only about 20-25%. So definitely that will lead to some kind of acceleration towards premiumization as a trend. The second impact is also in terms of the raw material benefit. So most of these companies also procure bulk scotch. Now, there's a duty cut in bulk scotch as well, which is going to play out. And that will have a positive impact, any in the range of 4 to 5% in terms of the absolute EBITDA upgrades for most of the Alcobev companies in a market like India.
And the India-UK FTA, if we can touch upon that, Karan, how much are you penciling in terms of an impact, and which are stock sectors where you see the best opportunity or the best pocket of opportunity to try and play this theme?
So from India-UK perspective, I think UNSP is the biggest beneficiary here because clearly they've got a higher salience towards Scotch and luxury. You will see acceleration for UNSP in a very big manner by 2 to 3% points going ahead because of UK FTA. Because luxury growth rate will increase from here on because of lower prices. But in terms of absolute EBITDA upgrade or in terms of earnings upgrade, UNSP would come in the last year because clearly margins are capped in the luxury segment because of the arrangement with parent like Diageo. As far as other companies are concerned, there's going to be an impact in terms of raw material benefit purely because most of whatever they make is inside India. They will also have an export opportunity to export into UK, the likes of Radico, ABD. But export markets that way has not scaled up in a very big manner. It's sub 10% of revenue for most of these companies. So the bigger benefit will come in the form of raw material in terms of lower bulk cost prices, which could lead to potential EBITDA upgrade in the range of 5 to 6%.
Okay, so 5 to 6% EBITDA upgrade. Karan, if I can squeeze in one last question. You know, we've seen, and on a totally different note, on QuickCom, we've seen fundraising happening, and I know you track this space as well. We've seen fundraising happening at a Swiggy level, and we've seen some of these stocks move. Zomato or Eternal has fallen below the 300 mark. And the price war will likely continue because war chests are being built up. A possible Zepto listing also added to the fray. Do you believe that the space, are you constructive on the space itself, and how are you viewing the evolution of the business?
So I think we are positive on this space from medium-term perspective. I think in the near term, there will be challenges in the form of new competitors or price war. But from medium-term perspective, the space looks quite attractive if it does scale up in the non-metro markets, right? That's the first thing. Secondly, I think the worst in terms of price war is largely behind us. Thirdly, I think in terms of the new entrants like Amazon, Flipkart, QCom and Ecom are both very different propositions. So they are coming into this market not to disrupt this market by price wars, but just to protect their market share because they have lost market share in many categories like grocery, apparel, accessories, and so on and so forth. So we don't see a very big price war from Amazon, Flipkart, which are largely e-com players. And I think the strategically, there's a big differentiation in terms of the way they operate e-com and QCom business dynamics from 1P, 3P to fulfillment to dark house, everything put together. And lastly, I think we remain positive on companies like Blinkit, which have got market leadership, good execution, operate at a very large scale in terms of number of stores, very strong growth rates as well, and with the lowest amount of EBITDA losses as compared to peers. And again, I think medium-term perspective, we will see a path to profitability. Most of the companies like Zepto, which eventually have to move to IPO, will have to showcase a path to profitability. So in the next 3 to 6 months, we will see a cool off in terms of discounting and price war. which will lead to triggers as far as profitability is concerned for the incumbent Q-com players.
And Karan, appreciate that view on quick commerce, but just driving this conversation back to the entire Alcobev space, you did give us an impact on what could happen to the financials of some of these listed players on the back of the UK-India FTA. But what happens to prices of different segments of alcohol back home? Any price cuts on the back of this FTA and then eventual maybe re-rating to some of the stocks?
So in terms of price cuts, I think the luxury segment will see a higher salience here in terms of price cut. The likes of red label, black label, entry level scotch, and the higher end scotch. Duty is a component of the overall MRP, and duty is coming down by half. But duty is not a large component; it's about a 20% kind of a component, or a 30% rather. So if the duty becomes half, your actual MRP goes down by 15 to 20%. So that's the price impact on the scotch and the luxury segment, which will lead to better growth for most of the companies. As again pointed out, the bigger beneficiaries here will be UNSP, which is a market leader in scotch segment, and they've got a very wide variety of luxury portfolio thanks to the parent company Diageo. The likes of Radico and ABD could see a small opportunity in terms of exports of their existing India-based products.
Okay, thank you so much, Karan. We'll let you go on that note, and thanks so much for taking our time and giving us your views.
Thank you.